It's time for a special Your Money segment. This morning we're taking a look at the connection between student loans and housing. Taking out student loans is usually the first major financial decision for many young people, but the challenge of repaying those loans, especially in the current economic environment, could lead to problems later in life, specifically when it comes time to apply for a mortgage or even save for retirement. We're joined by housing experts Ryan Coester. Ryan, thank you for being here with us.
Thank you, Andrea. Absolutely.
Talking about student loans, getting a mortgage, I thought the bank would look at your credit and they would see student loans as a good debt if you were paying them on time, but this isn't exactly what that's all about, is it?
Yeah, no, and see, and typically student loan is a good debt in the idea it's a long-term investment. So just like you said, it's the first big decision,
right.
The housing is really the second or the most largest decision. Anything that has to do with income, anything that has to do with debt is going to affect the ability for you to go and buy a home. So if you look at the cost of education, if you look at the pricing of education, it has significantly increased, but at the same time the income hasn't kept pace with it. So you've got a lot of students who would typically meet the exact profile of somebody who'd want to buy a home. They're well educated, they've taken education seriously, and they're looking for a long-term investment. The problem now is that the economy is a little weaker and they don't have the income to support it.
So if they don't have the income to support it, this boom that we've been seeing in the real estate market, does that put it in jeopardy again? It
definitely affects it more long-term than short-term. So right now there's still a built-up demand for housing. There's a shortage of housing. They haven't been building as much. So it's not as going to affect it short-term. Long-term, this is a major issue, and they consider this like almost the next bubble because there's no way out of it. Unless the economy recovers, unless the job market recovers, unless education costs decrease, there's no way out of this. Like for instance, the mortgage market crash a couple years ago, which we're starting to come out of.
So this is the next subprime debacle?
Well, I don't know if it's going to be a subprime debacle, but this is a major issue, and the CFPB, Consumer Financial Protection Bureau, has identified this as one of their major long-term issues they're trying to figure out a way to fix, and no one's come up with anything yet.
Well, that's kind of depressing because, I heard one economic report saying the end of this year and the end of next year looking good. There's a confidence. Look at the stock market and what's happening. Yeah. And the housing market is rebounding, especially in this area. It sounds like good news, but if there's no way out of it, then what do we do?
Well, I think they'll come up with something, and I think there's always going to be something, so something along the lines of, student debt being pre-tax, so that you don't, like similar to health insurance. It's a positive and a negative. So obviously the more educated workforce you have, the positive. Obviously the more you spend towards education, the probably higher ability you have.
Potential is there.
Potential is definitely there. I think this is more, the biggest thing is the weaker economy.
All right. And we know it's out of our hands in some cases. Brian, thank you for being here and alerting us to what could be happening in our future.
Thanks, Andrea.
Mike.
Okay.